So I'll just wait for a few more people to come in and then I'll start the full presentation. But again, if there's any questions now that anyone has, Craig, good to see you. Just feel free to put your hand up. I'm more than happy to stop throughout and go through it all. But I'll probably get started now. So let's have a look. So as the title suggests, everyone, what I'm going through today is the results of mining Bitcoin since 2014. For anyone that didn't hear at the start, the way that we got into Bitcoin mining was I was a bit of a gamer back in the day in high school, playing Counter-Strike, Dota 2, all the games till 3 a.m. in the morning. And it came to my attention that rather than running my computer to play games, I could mine Bitcoin. Back at that time, it wasn't earning much. It was a couple of dollars overnight, nothing substantial, nothing that was going to pay a mortgage off or anything like that. But obviously, we were getting exposure to an asset that not many people knew about at all back in 2014. In 2017, we obviously came into a much more interesting market. The coins that we'd collected went from a couple $100 a coin to $20,000 a coin. And we really, at that point, turned around and said, all right, we've got some serious money here. What can we do with this? And what we decided to do is start building our own computers, which could mine Bitcoin at a much faster rate. We were mining Ethereum at the time as well. From that point, we kind of turned around and looked at everything and said, all right, we could kind of spend our time working a 9-to-5 job, or we could keep buying more and more of these Bitcoin miners and really scale things out as quickly as we possibly could. And that's where we actually founded Mining Store. We had a lot of our family, friends at the time, started putting Facebook ads out, and we were absolutely inundated. We were getting told it was like the Steve Jobs operation. We were in our home just building these computers, sending them out all around Australia. Met a lot of cool people. But the problem that we faced was the power costs. It was really, really expensive to run miners in Australia. It costs around 30 cents. I know you guys are paying your power bills at home, and it didn't really make sense for us to continue doing that. So what we ended up doing was setting up some big hosting facilities overseas, and that's where things really changed from us. It went from a little bit of a hobby, where we were mining a couple $100 a month, to starting to generate an income of hundreds of thousands of dollars a year, just purely mining Bitcoin. So we've learned a lot over the time. On the screen now are some of the major benefits of mining Bitcoin and other cryptocurrencies like Casper, KDA. There's a whole heap of them. But the biggest thing that I love about mining is point one, it develops a long-term exposure to the market. So many people, pretty much every person I've talked to at our stall today, I've asked them, how did you get into crypto? And the classic story is, I bought in 2017, got wrecked, lost most of my coins, but I stayed hanging around. And that is a repeating thing. A lot of people, their entry into cryptocurrency is at the very top of the market. And unfortunately, they do find that they lose a lot of their coins as the market comes down. When you're mining cryptocurrency, you're kind of locked into the investment for a 4-year period. That's how long the miners last for. And every day, you're picking up Bitcoin at different prices. So today, if you've got your mining machine online, you're going to be mining Bitcoin at today's price. What is it? 37,000, 36,000. If Bitcoin drops to $15,000, you're going to be mining at $15,000. If it goes up to 60, 80, 90, you're picking Bitcoin up at different prices every single day. And that forces a dollar cost average strategy. So again, especially for people who are putting a lot of money into the market, in the 10s, 20s, $50,000, $100,000, if you put that into Bitcoin and it dumps down, you're going to get a pretty sick feeling that you've lost half your money. Whereas if we put it into the Bitcoin miners, you're forced to that long-term exposure and you just start picking it up at the lower price. It also means that you don't make stupid decisions and go, oh, it's dumped down, I'm going to sell it all out. You're kind of locked in for a longer period. The second point is obviously it's very passive. Pretty much everyone in here, I can imagine, has a full-time job, kids, family, everything like that. You're going on holidays, whatever it is. And it can be really hard in the cryptocurrency market to keep up to date with every single thing that's going on. That's what we love about mining. It's completely passive. When you purchase a Bitcoin miner with us, it gets sent to our hosting facility. We then plug it in. You pay 12 cents per kilowatt hour, which around about $260 a month to run your machines. And you don't really have to do anything else. It's all there, all managed for you. You don't have to set up all the infrastructure, anything like that. It's also highly scalable. Bitcoin miner starts at $4,000. That's what we're selling the S19K for at the moment. But you could get 1,000 of those. You can really scale as high as you want. Most people start with 1 to 5 miners, but then they'll scale up to 10. And when you get 10 miners, that's around about where you start seeing the power of the Bitcoin investment. The reason why is because you mine enough coins per month that you could buy another Bitcoin miner with what you have already mined. So if you've got 10 miners, by the end of the month, you have enough to buy another miner and you can scale out really quickly. That's what Cal and I did back in 2017 when we put into our first 10 miners. Started with that. After a few months, bought another one, bought another one, bought another one, doubled the size of our investment. And I'm going to go through a little bit more about what we've learned over these years and the best time to buy hardware and the best time to sell. I'll go to this slide here. Obviously, there's a major benefit to hosting, and what I mentioned before, that cheap electricity, it's a passive income, there's less infrastructure costs, no skill requirement, and it's easier to enter and exit. The exiting part is a really important factor that a lot of people miss out when they are mining. A lot of people buy Bitcoin miners and they never sell them, but you can do that. You can buy a Bitcoin miner, mine on it for 18 months, and then you can sell it off when it's worth a lot more, keep all the coin that you've mined, and then repeat when the market comes down. You don't have to do that. You can mine on it for the 4 years and it still would be a great investment. But just like trading, if you can time the market a little bit, and I'm going to be talking about that with the Bitcoin halving cycles, you can get a lot more out of your investment. So the image on the left is a photo of what a home setup looks like. It's quite complicated, uses a lot of electricity. We don't recommend it. We strongly recommend using a hosting facility. So what affects profitability? These factors here are what I call you can't control these factors. You can't control the block reward, you can't control the network fees, but these are the basic things that determine how profitable your mining operation are going to be. And just note, as I say in the red box at the top there, calculating Bitcoin mining returns based on what am I earning today, how many coins am I earning today, and what are they worth, is probably the worst way that you can calculate your mining returns. The main factors that affect revenue are your current block reward. So back when Bitcoin first started, 2008 and onwards, the block reward was 50 Bitcoin per block that you mined. So as I was saying, back when we were mining on our computers, we were earning a lot of Bitcoin. They weren't worth a lot, but every 4 years that's halved. So it went from 50 Bitcoin per block to 25, down to 12.5. Now we're at 6.25. But of course, Bitcoin's price has gone up a substantial amount since then. The other factor that affects your mining rewards is network transaction fees. This one's a really interesting one. Does anyone in the audience know of Bitcoin ordinals? Did anyone take note of that this year? When NFTs started launching on the Bitcoin network, we saw transaction fees go from 0.3 of a Bitcoin as high as 2. And right now, because of how high Bitcoin's price is and how high trading volume is, Bitcoin block rewards have gone to 2 BTC. So our mining rewards have actually increased by 30% just from Bitcoin block rewards. If you use an online calculator to calculate mining rewards, they don't even include the Bitcoin block reward. So it's actually, all they're doing their calculations off is just off the block reward, which is 6.25 Bitcoin. They're not even considering that the network transaction fees. So that can add a substantial amount to your profit. Obviously, the price that you sell your Bitcoin at affects your mining rewards, and I prefer to use the price you're going to sell at. When you're mining, you're not selling on the day that you mine those coins. You're looking to sell in the future. You're not looking to basically mine today and sell for $5 profit. You're looking to sell it when Bitcoin goes to its all-time highs of 60,000, 80,000, 90,000, 150. I don't know what you guys think Bitcoin's going to go to. My projections for this next run are around the 150K mark. So I'll be selling my Bitcoin that I've mined over the past years between the 80 to 150,000 mark. That's what you should enter in any calculator that you're using. the price that you plan to sell your Bitcoin at, not the price today. Of course, network difficulty affects it as well. The more people are mining, the more competitive it is, and the less rewards that you get. And then, of course, the hash rate that you have. Bitcoin miners are based on terahashes. So the current miner we have now is 120 terahashes. And that obviously will determine how much Bitcoin you're mining. If you've got 200 terahashes, you're going to get more Bitcoin. The last factor that affects your returns on a daily basis is the power. So Bitcoin miners use 2,900 watts of power. That's what the S19K is. There's some miners out there that are using 5,000 watts of power. So obviously that is going to cost you a lot more to run. So if you do want to buy a Bitcoin miner, you want to buy a miner that has the highest possible terahashes for the lowest possible power draw and is not too expensive as well. You don't want to pay $10,000 for a 200 terahash miner when you can pay $3,000 for a 100 terahash miner, if that makes sense. Other factors that affect your profitability, of course, as I just explained there, the cost per terahash and the power draw, the price that you sell at, whether you are reinvesting the coins. That's a big part of what we've taught our clients to do, is to not just hold your Bitcoin in a ledger wallet and keep that there forever. Does anyone in here know the project Rune or Thorchain? No one? A couple people? You can earn 2 to 3% by staking your Bitcoin in their vaults. So that might not sound like a lot, but when you scale your mining operation and you have multiple Bitcoin, hundreds of thousands of dollars, earning an extra 5 to 10 grand a year by simply putting it in a vault, it does make the difference. It can pay power bills, it can help you expand. It makes a big difference in the long run. All right, so if there's one thing that I want you guys to take from today, it's this chart here. I'm sure most of you know what the Bitcoin halving is, if you've been in the market for enough time. And this here is basically showing you the cycles that Bitcoin goes through. Every 4 years, as I said, the Bitcoin mining reward halves. So it's gone from that 50 in that yellow section to 25 in the pink section. In the blue section, it was 12.5. And now in the green section, which is where we are currently, it's at 6.25 Bitcoin. That's about to halve again in April next year. And at that point is where we usually see Bitcoin's price spike the hardest. Now, what does this have to do with mining? Timing the purchase of your mining equipment is half of the game. Back in 2019, Bitcoin miners were selling for $15,000 to $20,000 per miner. Just to get a 100 terahash miner, you were outlaying $15,000 to $20,000. Right now, where we're at a more boring stage of the market, although recently it's been better, Bitcoin miners are currently selling for $4,000. So although the mining rewards are lower, you're only earning $5 now compared to back in the bull run, you were earning $20 to $30. It is a much smarter decision to buy your Bitcoin miners now before the Bitcoin halving happens and before price starts to rally. Get your hardware costs as low as possible. Then leading into the bull run, what tends to happen is everyone sees that Bitcoin miners are earning $20, $30 and they want to buy them. The price of these miners goes up from $4,000 to $5,000 to $10 to $20 per miner. And what you want to do is you want to actually consider selling off your miners at that point. That's what we encourage our clients to do. It's the benefit of having your miners at a hosting facility as well. When you have your miner at a hosting facility, you can easily say, I would like to sell my miner to anyone in the world, and they can pick it up and buy it off you. When you're hosting it at home, you may have to go through eBay, Gumtree, all the rest of it. It takes too long to sell it. You won't end up doing it. You'll probably sell it off for something that's a lot worse than what you should actually be doing. So just to reiterate, we're about 6 months from the Bitcoin halving now. Right now is the cheapest we've ever seen Bitcoin mining hardware. If you are looking to get into mining, you want to be buying the hardware now. You want to be mining on it for the next 18 months, leading into the peak of the market. When we start seeing Bitcoin's price at 80,000, 100,000, 120,000, and your miner is earning $10, $20, $30 a day, it's hard to say, I'm going to get rid of this asset that's making me a lot of money. But if you can sell it for 3 or 4 times the price that you bought it for, you've kept all the mining rewards for 18 months, and you've also sold the miner at a profit. That's the aim of the game. It's the best strategy that we've implemented. We did this in the previous bull run. We were buying M20S miners for $2,000 or $3,000 a miner. We bought around 200 of them. In the peak of the bull run, we were selling them for $12,000, and we had kept all of the 18 months of Bitcoin that we'd mined on it. We didn't sell all of them. We kept around 25% of them, and just recently we started to turn them off. They were a bit old, like 4 years. They'd tend to not be able to compete with these newer generation models. But that's probably the best part of the strategy we've done, is buying the hardware 6 months before the halving, selling it 18 months after the halving, and then obviously as the market crashes back down, pick up all the hardware again at the cheap price. As I mentioned a few times, we don't just mine Bitcoin. 80% of our portfolio is in mining Bitcoin, but all of the Bitcoin that we are mining, we are putting to work. Whether it be through DeFi strategies, earning an extra 2 or 3% on the Bitcoin that we're holding, or through day trading, we intra-trade the highs and lows of the market to make sure that we're compounding our returns. Everything that we make from DeFi and day trading, we are using to either pay off our power bills or to buy new miners when miner prices are at all-time lows. For our clients, not everyone understands everything that I'm talking about when they first get into crypto. And so we put a big emphasis on education. We have 10 module courses that will teach you what we feel you need to know, everything about day trading before you get into it. We also have hired a full-time analyst who will give you all of his perspective on intraday price action and what he's doing with his trading. And I've actually got some of our clients in the stand today. I might get Craig, do you want to come up? And Ryan, if you're in the stand as well. Can't see him, but there he is at the back here. Both of these clients have been with us for quite some time now, and there's a reason I brought them into the stand. They'll tell you themselves that when they first got into Bitcoin mining, they had no idea what they were doing. When they first got into trading, and this is no offense to the guys, they'll admit it themselves, they didn't know what they were doing. But it was through the education that we provided them, the community that we provided them, that day by day they became more and more confident. I might hand the mic to Craig. Do you want to say a couple of words just about how you found Mining Store Imperial Wealth?
Yeah, I've been trying to think. It's probably 6 years, Will, I've been a client of you guys. So yeah, started with CPU and GPU mining. And through the methods we've learnt from the guys, just upscaled to now having quite a number of Bitcoin miners being hosted in Europe somewhere. Yep. I don't care. I pay the bill, and Bitcoin hits my wallet once a week. It's a massive profit for me. The Discord community these guys run is second to none, I would say. The education, the mentoring. So yeah, the strategies to trade and just grow the portfolio every day. Yeah.
When you first started trading, what was your kind of initial thoughts of it, and compared to now after being involved with the Discord and doing the education?
And when I first started, I was basically throwing darts, hoping for a win. And now I have a real strategy in place.
Yep.
And, with the technology we have now, you set alerts for the prices you want to hit or entry points and everything. Yeah, it's chalk and cheese.
Yeah, nice.
Yeah.
And Ryan, I think similar. So you started with the Bitcoin mining, as we suggested.
Yeah, I started with 4 miners and gradually bought more.
Yep.
It's for me. When I started, I had no idea. Like the same thing as Craig was saying. I bought a few coins and basically lost them all straight away.
Yeah.
Had no idea, and then got into talking with you boys and got into Bitcoin mining and haven't looked back.
Yeah. And then obviously, after the Bitcoin mining, it gets boring, doesn't it? I mean, it just sits there in the background. You're not really doing much. It just constantly. The great thing is every day you have Bitcoin coming into your wallet, and then what you do with that Bitcoin is where things get fun. And that's where Craig and Ryan both started with the Bitcoin mining, but then obviously they see we do DeFi, we do trading, and they go, oh, okay, I wouldn't mind getting the education on that. Ryan, honestly, sorry, Craig, but Ryan, you've been the most impressive out of all of our day traders. Ryan had not really, absolute goer, by the way. Gives it his all, but didn't really know anything about trading at all. and now is closing off trades in the profit on a daily basis. It's been pretty phenomenal to watch, to be honest. So congratulations.
Thanks,
yeah. Cheers. Thanks. Thanks, Will. Cheers. Cheers, boys. Thank you. Well, that pretty much sums up what I want to go through. I hope if there's a couple of things that I want people to take from in the audience, it's that getting into the mining side forces you to have that long-term exposure. It also creates a lot of opportunities after the fact. I don't think that getting into crypto and maybe buying at the top of the market is the best thing to do, and then watching everything kind of fall to dust. And people tend to feel like they know a lot more than they do. When you get in from the mining side, you're going to start getting that longer term exposure to the market. And then what you can do with that Bitcoin to get into DeFi, earn yield on that, get into the day trading, the next steps will come after that. But as I say, our portfolio is 80% in Bitcoin mining, 10% we put into DeFi, and then 10% we're in day trading. Thanks everyone, by the way, for coming and listening. But before I finish up, is there any questions in the audience that you guys want me to answer? Oh, do you want a microphone?
Thanks. You hear me?
Yep. Gotcha.
Yeah, so Wayne, so with buying the machines and then hosting them in the data centers, and obviously they're run by companies and data center organizations. Yep. If they get into financial difficulties, what protection do we have on those machines we've bought?
Yeah, great question. So just to repeat, so I think you were asking with the hosting facilities, if they went into financial difficulty, what would happen with the miners? Is that right? Yeah, that's correct. So all of the miners that clients purchase through us are owned by you. They're not owned by us. If you actually wanted your miner to be shipped to your home, say for some reason you got free power or you found another facility that had really cheap power and you wanted to be shipped there, all of the miners are owned by you guys. It has actually happened before. So we were previously hosting in China. A lot of our miners were in China, but then China banned mining, and we just had to find another hosting facility to send it to. So that's basically the question. The miners aren't owned by the facilities, they're owned by you. And if you would like them to be moved elsewhere, you can do that as well. Thanks for your question. Does anyone else have any questions? Yep, take the mic.
Mining is actually restricted by algorithms, right? So
it's restricted
by algorithms, right? For example, a
Yes.
Bitcoin miner can't be used for Ethereum, or Dash miner can't be used for doing Bitcoin, right?
Yep.
So how do you actually create a strategy with which you have got maximum profitability? Like the same miner can't be used on every single cryptocurrency, and once you buy a miner, you're stuck with it.
Yes, great question.
I've done it before.
Yeah, great question.
Like I bought a Dash miner, I got stuck with it.
Okay, so basically, what was your name, sorry?
Ed.
So what Ed's referring to is with the ASIC miners, they're specifically built to mine a certain algorithm. Bitcoin miner is on the SHA-256 algorithm, Litecoin's on the script algorithm, and the reason that they are built like that is it's like specialization. When you build something specific to do something, it does it the best, right? The problem with that is that you can't go, okay, I'm mining Bitcoin on a Bitcoin miner, Litecoin's making a lot of money, I want to switch to that, right? So what we encourage our clients to do is, as I say, 80% of our portfolio is in Bitcoin mining. A very small portion is in altcoin mining. We don't encourage clients to start in altcoin mining for that reason. It can be super profitable. Litecoin's doing really well at the moment. Casper at the moment is doing really, really well, but it is a bit more of a risk. We really encourage people to go heavy into the Bitcoin mining. Yes, it can seem like, $5 a day is not that much, but in the long term, and when you're selling the coins at the higher price, that's where you really see the profits. So just be mindful when you are getting into mining. Don't get sucked into a miner that's earning $5,000 a day. It usually won't last at that. And also make sure that you're getting the guts of your portfolio into the Bitcoin side. Does that answer the question?
Yeah, that's right. So the strategy, what you are saying right now, that helps you cover up the power bills?
Yes.
So like $5 you are saying in profits, or is it like your cost?
So that's profits, and it's a really good point as well, because as Bitcoin's price rises, your power bill stays the same. So your power bill is always going to be $260 on the miner, and you're earning $5 profit, but the power bill is taking up a large point of that revenue. If Bitcoin's price goes to 120,000, you would think, oh, okay, my profit will be $15. It won't. It will be more like $25 because your power bill is only $260, but your overall revenue is increased a lot more.
So we are seeing profits on a daily basis. It may be less, but what I'm trying to say here, like you're not on red zone. Because with a lot of mining, you're actually on red zone.
Yeah.
The power bill is also not covering up the mining cost on a daily basis.
Yes, with a lot of old generation miners. So if you have something that's like a 70 terahash miner that's 3-4 years old now, they're probably starting to hit the red zone. But any of the newer generation miners are at around the $4 to $5 profit at the moment.
Okay.
Cool. Any other questions out there? Couple? Do you mind passing it for me? Thank you.
Hi. Just as an entry point
Yep.
to doing some mining, I mean, I don't really know anything about it, but as an entry point, if someone wanted to do that, what price are we looking at, just entry point?
Yeah, great question. And good on you, by the way, for looking into it and getting involved. No, age is never a factor. But basically what you're looking at now, as I say, the best time to get into it is it's only $4,000 to buy a Bitcoin miner. If you wait for the Bitcoin halving and for Bitcoin to start hitting the news and all-time highs, you're going to be looking at more like $20,000 for the same miner. So as a general idea of what your first, say, 6 months of mining looks like, you would pay your $4,000. We would then order your miner. It gets shipped to our EU hosting facility or the USA, whichever you choose. You then start paying $260 per month for the power bills, and your miner mines directly to your wallet. It's around, at the moment, 0.1 Bitcoin per year that you'll be mining. Does that answer the question? There's one at the back here as well.
So my question's around the pools. And
Yep.
what you guys do you guys play around with optimizing pools? Do you mess around with that at all? Or
Yeah,
is
of course, yeah. You want a bit of information on pools?
Just how you go about optimizing the pools and
Yeah,
or
absolutely.
if you do that at all, what the benefits are.
So the major pools that are, I'll first explain what pools are. So when it comes to mining, as I said, the Bitcoin block reward is 6.25 Bitcoin, and there's a reward that goes to a miner every 10 minutes. Now, if you turn a miner on and you don't connect to a mining pool, which I'll explain what that is in a second, you're going to be trying to win the lottery to win that block reward. You're not going to, probably in the lifetime of the miner, ever win as a solo miner. So what was your name, sorry? Aaron. So what Aaron's referring to is you can join a mining pool, and basically what that means is, say all of us in this room right now all buy a miner and join together. If we do hit a block reward and we earn that 6.25 Bitcoin, we will share it amongst each other for the equivalent amount of hash rate that we put in. So that's what Bitcoin mining pools are. All of our clients are mining on mining pools, and that gives you more of you can see on a daily basis what you're going to be earning because the pool every day earns a similar amount of block rewards. So do we play around with the optimization? Basically, we used to mine with F2 pool, but recently we've moved over to Luxor pool. Luxor, there's two benefits to it. One is they're a lot cheaper on the fees side, and also they have some software that you can implement on your miners to make things more efficient. So that's probably as far as we go around with tinkering with pools. There's not much more that you can really do on that respect, but choosing a pool that has low fees is optimal, and also a pool that constantly earns block rewards. You don't want to join a really small pool and be like maybe earning a reward every 6 months, and it might be a big reward, but you're kind of gambling at that point. Does that answer the question, Aaron?
Yeah. It's an interesting one. I've always wondered, I mean, obviously there's the cost, whoever's got the cheapest fees, but beyond that and decentralization, going down that path, I mean, what are people doing around optimizing beyond that?
Yeah, pretty much just choosing the one that has the lowest possible fee. Clients that sign up through our link get a lower fee than standard people as well. So we integrate everyone with all that, but yeah, that's pretty much as you can do is choose a fee that has pool that has low fees and has high block rewards. Any other questions out there? I think there's someone on this side over here. Cheers, Craig.
Hey, how are you?
Good, mate.
My question is in regards of GPU mining. What are your thoughts on that? Is it still viable? Should I sell all my rigs? Because I've still got a lot of GPU rigs. And what do you think is the best coin to mine in GPU mining?
To answer this question, before I mention ASIC mining, which are computers that are specifically built to mine a certain coin, the other type of mining, and this is back in the day in one of the slides, you can see some GPU miners. They are like home setups. They just look like a standard computer. They could, when me and my business partner were in a shared house together, we had enough of these running that it was paying more than our rent per month. So I've got a lot of love and appreciation for the GPU mining. Unfortunately, it's probably not the most profitable anymore. As I say, the image on the right, you've got these computers that are specifically built to do mining now. So there's not too much, sorry mate, to answer your question, there's not too much out there left for the GPU mining side. But there's always, a couple coins on the side that you can pick up. My area of expertise is more in the ASIC now, so I haven't followed it too much. But maybe there might be some people in the room that are doing some GPUs still. How many of them have you got still?
I'm not at liberty to say.
Too many.
We had a good run when the Ethereum.
100%, yeah. Like we more than made our money on our cards with the Ethereum mining, but yeah, obviously the dream came to an end on those ones.
Yep. Cheers.
No worries. Any other question? One up the back here.
Yeah, my question's just around life of miners and depreciation.
Yep, great question. Yeah, so with the life of the miner, like any computer, you're looking around 4 or so years. With the strategy that we follow, and again, I highlighted it when I was talking, the best thing that you can do is buy miners when they're at their cheapest, which is now. They're around the $4,000 mark. To put it in perspective, in the bull run, they were around $20,000. You won't really care about the longevity of the machine if you follow this strategy, because you're trying to buy the miners at this price now, mine on them for the next 18 months, and then you actually want to look to sell that hardware off in the peak of the market when everyone, and it's a hard decision to make because they're earning a lot. They might be earning $20 or $30 a day, but you want to go, you know what, I bought it for $4,000, someone's willing to buy it for $15,000 now and actually sell it off. It's not an essential part of the strategy. Absolutely, we're still mining. Recently we turned them off, but we were mining on M20S miners all the way through for 4 years. You may need a fan replaced along the way. Sometimes if you're unlucky, a hash board might go down after 2 or so years. It's usually around $300 to repair a hash board, but that's pretty much the answer. Usually they'll be outcompeted. You could probably turn on your Windows XP computer at home still, but is it any good?
Yeah, so what's your strategy after 18 months if you're selling your miners? If you want to get, how's that a long-term sustainable strategy?
Yeah, so obviously what you're looking at is you're buying the miners at the $4,000 price now, looking to sell them at the higher price. You don't have to sell them. You could still mine on them throughout the whole course. If you do sell them, then you can, as the market comes down, similar to trading Bitcoin. If Bitcoin's was at $50,000 and you sold it, you look to reinvest into more miners when the market comes back down. It's not essential to buy and sell the miners. You can mine on them all the way through, but if you do time it and get that right, you can really scale out your farm a lot faster. Any other questions out there? Ed? Yeah, one more. And any at the back here, by the way? All good? All good? One here as well. Ed, and then I'll come to you next.
My question is, the miner which we are buying for $4,000 now, after 18 months, because technology has upgraded, what will be the value of the miner at that time? Because it won't be mining that many Bitcoins, and there will be new models in the meantime, which have come to the market already. Yep. Second question, if I've got a self-managed super fund, and if I invest into this miner with that, can I claim depreciation over there?
Yep, 2 really good questions. Yep. The first question about can you repeat the first bit? Sorry.
Yeah. So for example, like I'm buying a miner for $4,000 now.
What it'll be worth? And yeah, gotcha.
In next 18 months, there will be better miners coming up in the model, and this miner will get obsolete. So what will it sell for? It won't be like high price, like 20K or something like that.
For sure. It really comes down to the point that I mentioned in, I think, this next slide here, is the cost of the terahash and the power draw. So it's all well and good that a new miner comes out and it's a 200 terahash miner, and I've only got a 120 terahash miner, but how power efficient is it? If it's using double the amount of power, then it's not really outcompeting what's on the market. Definitely, the miners over the years have gotten more and more efficient. We're starting to see that slow now. So when a new miner comes out, the metric they use, you divide the amount of power that it uses, so 2,900 watts, divide that by how many terahashes you're getting. So 2,900 divided by 120 is 24. So you're using 24 watts of power per terahash you get. I don't really see, I'm not going to say it too early because who knows, technology can be crazy, but I can't see that coming down to 15 watts per terahash anytime soon, you know what I'm saying? So yes, they can come, new generations can come out, but that miner that you buy, in our experience, we've still been able to mine on it for 2 or 3 years in the profit and not be out-competed. But if you can sell them off after the 18 months and time it right, that's the optimal strategy. But otherwise, you keep mining through. Your second question?
Self-managed super fund.
Yeah.
So are you able to like claim depreciation? Like for example, for any business, you claim depreciation on the life of the cost of the miner.
Sure. I've got so Craig's an accountant. I can see him looking at me. Don't give accounting advice, Will. You're not a chartered accountant. But what I would strongly recommend is there's a few accounting agencies here. I think there's New Brighton Capital. I can say what I'm doing. Yes, of course, we depreciate the assets. Like during COVID, there was the incentive that you could instant asset write-off. So yes, you can depreciate the assets over the time. But yeah, obviously speak to your accountant about the financial side of things.
Thank you.
No worries. I think the gentleman here, all good? No worries? And all done. I'm getting the cut-off, guys. So thanks so much for everyone to come in. Our stands at the back. We're doing a $10,000 giveaway at this conference. So one of the S19Ks that's actually on the screen right now, you can get access to that. It's a $4,000 miner. All you need to do is scan the QR code, and then you'll go in the draw to win that. We're also giving away one of our day trading courses, which is usually $5,000. So enter the draw over there, and yeah, come and chat to us. We've got our full team over there and love to speak to you all. Thanks for listening.